first of all, I'd like to thank everybody at IFA Galaxy for, organizing this year after year, a fabulous conference. Many compliments to all of you for organizing this and also, of course, giving White Oak Capital and myself the opportunity to come here and speak to all of you. So, what I'm going to speak about today is, in line with the theme of the conference. I think it's a very beautiful theme to talk about Vision 2035, and that's what I'm going to speak about. I was told to, pick one idea which will help us to get towards this 2035. So what I'm going to speak about is, the need for wealth managers, mutual fund distributors, all of us in the industry, the need for us to be able to relate to the right audience. Okay. Now, let me tell you why did I think about this and why I'm speaking about this. I think that most of the people in this room, who are successful mutual fund distributors, wealth managers, AMC professionals, I think there is one thing that at least when I talk about AMC professionals, the challenge, the good part as well as the challenge, is that our industry demands track record. It demands competency. It demands experience, right? So by the time any of us get into so-called senior management, we all are nearing 50, right? You expect your portfolio manager to have 25 years track record. You expect the CEO to have 25 years track record. Partly even regulation expects people to come with some track record and credibility. So what is happening is that most of us at the helm of affairs, we are all bordering on 50, correct? A lot of successful wealth managers, mutual fund distributors here also, who have started, most of us have started in early 90s, mid 90s, late 90s, or maybe, early 2000s. But all my friends here, they are also plus minus of my age. Like I'm nearing 50, and I have seen that most wealth managers, mutual fund distributors, they are also slightly older than me, slightly younger than me. But I think on average or the median must be close to 50. So most of the people here, you have about 20 years plus experience in being a wealth manager, mutual fund distributor, correct? Now, one more hypothesis I'm going to make, apart from guessing your age, the other hypothesis I'm going to make is that the clients that you have today, of course, every year you must be acquiring clients, but for everybody, 20% of the customers make up 80% of the AUM, right? And the clients who have scaled with you, you must have acquired those clients 10, 15 years back. So you started in this profession when, say, you were 30, 35 years of age. Now you're a successful guy, 200 crore, 500 crore, 1,000 crore AUM. You are around 50. The customers who are your biggest customers, you acquired them when they were your age, which is 30, 35 or 40. Now, when your customer has gone from being a lakpati to a karodpati, and gone from being 35, 40 to 50, 55, you have also gone from 10, 20 crore AUM to 50, 55 years of age and 200, 500 or 1,000 crores of assets. So what has happened is that you acquired customers, your customers have grown with you in wealth also, knowledge also, and rightly or wrongly in the age also, correct? But if you see, here we are told to talk about 2035. In 2035, your existing customers will be buying weekend homes and retiring, right? And I think most of you will agree with me that there is one problem, that all of our customers, jisko hum, we get them in the industry, we make money for them, we help them wealth grow. When they have some amount of wealth, ultimately what do? They buy a big house, correct? So what will happen by 2035? A lot of your big customers will become older and they will start in the distribution phase, what you call. So the point is that if you are talking about 2035, then your customers of 2035 are today 30 years old, correct? But you are not going to go back to 30 years of age, right? So, I know that you acquire customers every year, so don't take it as an extreme case. But the point is that today all your big customers, what's the age of a rich person today? If I tell you that XYZ gentleman or lady is extremely rich, what age do you guess for that person? 50, 55, right? So in 10 years, those people will be in distribution phase. And the people who will be your big customers in 2035, what is their age today? Must be 30, 25, 35, right? So that's why I've written here that you need to be able to relate to the right audience. And when we acquired customers who were of our age, and when they grew with us, we didn't realize this difference. But if I tell you that you have to acquire customers who are 20 or 25 years younger than you, then it will be a very, very different scenario altogether. And there is one big problem with this. What is the biggest problem is the generation gap, right? And what is the problem with generation gap is that every generation thinks that the next generation doesn't know anything. Correct? See, like today, for example, I am on television, newspapers, social media. In the last 4 or 5 years, what is the most common thing you hear? The most common thing you hear, last 4 or 5 years, we have seen millions of SIPs being registered. We have seen millions every month. Millions of SIPs being registered every month. We have seen millions of broking accounts being registered every month. What is the most common commentary? What do you hear in the press and everywhere? Oh, these fellows have come after 2020. They never seen a correction. If market falls 10-15%, all of these guys will run away. That's what you heard. Correct? Is anybody running away? Have you seen anybody running away? So that is the first time I realized what a big generation gap we have. All of us 50-year-old think that these 25-year-olds who are coming in the market, they don't know anything what the hell they are doing. And all of us 50-year-old think that all these 25-year-olds who are coming, they are going to run away if the market falls 20%. That is because we are thinking how we reacted in 1999 or in 2000 or in 2003 or in 2008. But if you think that people who are 25-year-old today are going to react to a crisis the way you reacted 25 years back, you are going to be sadly mistaken. You know what is the reason? The reason is because the people who are young today, okay, they are your kids, they are not you. They are your nephews and nieces, they are not you. Big difference. People who are young today, their socio-economic background is very different from your and my socio-economic background. Let me give you one simple example. 25, 30 years back, if I lost 5,000 rupees in the market, my mother, my mother's sister, my dad, my dad's brother, my dad's brother's brother-in-law, everybody will know that Hansaben's son lost 5,000 rupees in the stock market. And every social gathering, they will discuss, ये outline का आदमी है. He is going to destroy the family. He lost 5,000 rupees in the stock market 25 years back. Today, it's a legitimate way of losing money. It's perfectly normal, right? So people who are 25-year-old today, they don't get any social stigma if their FNO position loses 5,000 rupees. And their socio-economic background, their educational background, their aspiration level, their risk tolerance, their confidence in their future versus what was your confidence in your future, the technology, the regulation, they are in a different world, they are different people, they are not you. So the first thing we have to do is that we have to be relatable to younger people. And if you want to relate to see, all your clients of the future are today 25-year-olds. That is one thing is clear. Now how do you relate to them? The first way to relate to them is to stop preaching. Today if you tell a 25-year-old, ye mat karna, don't do it. Let's say you have a client, right? Your client's kids are 25-year-old. Am I right? 20-year-olds, 25-year-olds, your client's kids. If your client says, oh my God, my son is trading FNO, what are you going to say? You are most likely to say, beta, don't do it. You will burn down this house. It is like addiction. It is like a drug. Stay away. That's what you will say. You know what is the reaction going to be? Appa, when this uncle comes, keep me away. Isko kuch nahi malum hai. You may be, I'm not saying you are wrong, you are right. You're right, I'm not debating. I'm on your side. I'm just saying that today's 25-year-old, please don't preach. By the way, when I was 25-year-old, anybody preached to me, even I didn't like it, but I was forced to respect that. And my bank account was tracked, right? Sir, what happened? I think Mohsin sir is frustrated. He's not liking what he's listening. Oh, you're telling me I'm preaching? So sorry. You have called us to preach only. You have no choice. A captive audience. You have to listen only and go. So anyway, first thing is that today's youngsters, right? I think I got high on my own supply. So I was just trying to say that today's youngsters, the base, your investor base is changing. So be careful. The second thing, I'm not going to talk about demographics and all. You understand all of that. The other important thing is that today's youngsters are telling their parents to invest in capital markets. Correct? There are some who have not invested and whose kids are 20, 25-year-old, they have more exposure. They are the ones who are telling their parents, that I've heard that in the last 32 years, Sensex has doubled every 5 years. What the hell were you doing? That kind of questions are also being asked. Correct? So I think we have to engage. I mean, basically what I was trying to say when I said don't preach, if I was told that some kid is trading FNO, I'll say, good, get an experience. Make sure you don't blow up the house. So be careful. Lose what you can afford to lose. Okay? Don't start preaching. Just try to get on their side. See, for example, a lot of people in our industry, mutual fund guys, very common to tell others, don't do equity. You should do only mutual fund. Don't do equity. What is the point of me saying anything? The fact is that more broking accounts are opened than mutual fund SIPs are opened. And every broking account is a unique account because people don't open 3 demat accounts. But every guy who does a SIP does 3 SIPs. That's the average. Correct? So the fact is that you will have to come to the level or to the plane of today's youngsters and you will have to engage with them at a plane of their choosing. You don't expect that they will align with what you think. You will have to align with what they think. Right? So the point is that you have to get off, this thinking that we should not do real estate, we should not do equity. You have to do everything what your client is going to do. Your client may be investing in mutual fund. Your client's kids are doing equity. Correct? So you have to think how to get to multiple product ranges. The other thing, I'm going to skip this faster. The second thing which I wanted to talk about relating to the right audience. How many of you deliberately reach out to women when you're prospecting for clients? See, Rupa ma'am. So I always tell people that if you want to empower women, see what I've seen, very funny thing. It's not funny, it's just an irony. A lot of time we are said that this is a program to educate women on finance. So when I go to educate women on finance, who is in the audience? All the women. So once I went and said, "Arey boss, if you want to empower women, in the audience you should have the men, no? Women know they should be empowered. It's the men who are the morons, right? It's the men who think that they are invincible. It's the men who think that they are actually never going to die. It's the men who actually don't allow women to, don't update them, don't apprise them of many situations, right? But today, if you really ask me what is changing, and this is an AMFI survey actually, AMFI and CRISIL, it clearly says that nearly 50% of the women are making their decisions themselves. And what I've seen is that we have a lot of wealth managers and MFDs who are men. And when they are prospecting, they are likely to reach out to men. When they look for references, they are likely to reach out to men. But in a lot of households, the women are making their own decisions. It is changing, right? I think Rupa ma'am should speak more about this than me. My job is just to say that if you want to be having a thriving practice, if you want to be a bigger wealth manager in 2035, then you should be targeting young people as your customers, people who are 25, 30 today. Also, last thing I'll tell you, today in India, there are 72 or 73 lakh people who work for IT, ITES and global captive centers. 20 years back, if somebody told you that large number of our clientele will be IT or computer engineers, what you would have done? You would have been going around looking only for computer engineers as your customer, right? So you have to think that in next 10 years, where will the largest cadre of professionals come from? What type of education, what type of industry, and what type of job roles? So I'll just end by saying 3 things. One is look for young people to be your customers, be more relatable to them, and don't preach. The second is go out of your way and deliberately prospect for women as your clients. And the third thing, look for prospects and clients with the right educational background from the right industry where you think there will be prosperity in the next 10 to 15 years. So that's what I wanted to share with you. Thank you very much for listening me out. Wish you all the best.